On the macros front, rising crude prices weighed on rupee and hit to the lowest level of 68.07 against the dollar in 16 months. However, Indian bond yields stood away from the losing trend and surged to a 3-year high. Let's take it across then to Vivek Rajpal of Nomura to talk a bit more about that. Hi Vivek, good morning. Thanks much for joining in. Do you believe that yesterday's uncertainty as far as the political scenario goes was the last straw which pushed the rupee as, beyond the levels which we saw in Jan 2017?
Hi. Yes, I mean, political uncertainty clearly played out. I mean, INR has been commanding some kind of a political risk premium, especially being a pre-election year, and Karnataka state elections was carefully watched and implications, etc., are analyzed. Though BJP turned out to be single largest party, but there is uncertainty on who will form the government. This is clearly weighing on the market. I mean, not to mention that there are bigger factors as well, like oil prices, U.S. Treasury yields rising. So overall, I think it's better to stay cautious on INR.
Definitely, but what's your outlook ahead? Because of course we are looking at a lot of macro factors, both domestic as well as global, which have been putting a fair amount of pressure on the Indian currency. Because among the biggest concerns is of course higher oil prices, which you just pointed out, and a larger oil import bill would mean that. Could rather mean that India's current deficit account could actually widen to about 2.2, 2.3% from the current 1.9%. Do you also believe that, that this is a probability that could play out if the oil prices continue to surge? And what is your outlook ahead for the rupee's movement?
So, rupee clearly largely depends on, number one, at a very high level, how the broad dollar is doing. And number two, clearly a rise in commodity prices, or if the oil price rise happens, then India, being a commodity importer, suffers the most. And this is one of the reasons why we are seeing underperformance in INR, even if you see a broad EM currency complex. The thought process here is that near term, one should stay cautious on INR. At the moment, things don't seem to be in place for a meaningful change in INR on what is happening. And therefore, probably the trend that we are seeing may continue for some more time.
Right. While the INR has actually, weakened a fair bit, we're seeing that the Indian bond yields are far away from weakening, and the surge, upsurge has continued, and now it's at a 3-year high. What is your view there?
So bonds are also selling off, right? I mean, bond yields are rising. The view on Indian bond yields is that, I mean, of course, as I mentioned, crude oil prices adds to inflationary expectations, adds to uncertainty on the fiscal deficit, which is clearly weighing on the market. But most importantly, recent inflation print, where core CPI actually surprised on the upside, also has increased the likelihood of rate hikes. This is also weighing on the bond markets. And I mean, it is likely that bond yields will continue to move higher gradually until we reach a stage where markets start thinking about what will be the terminal rate in this upcoming rate hike cycle from Reserve Bank of India.
All right, Vivek, we'll leave it at that. Thanks much for joining us right in the morning and giving us your view on the macros, especially the rupee, and what your stance will be. And given the kind of uncertainty that is playing out around the globe and in the domestic front, on the political front, Vivek continues to remain cautious on the rupee for some time now.